Hello and welcome to another video from the Marketing Study Guide. In this video, I'm going to have a look at how you actually select target markets. What basis do you use to choose the best segments to target? My name's Jeff and I'm a long-term marketing lecturer and practitioner. Okay, I'll just start by setting the scene. You probably already know this, but just to recap, market segmentation to target market selection. The broad steps are we start with our overall market, all our consumers, and we try to identify related sets of consumers that are related on something that is marketing oriented and something we can use in our marketing mix. And usually in textbooks you'll see there's geographic, demographic, psychographic, which is lifestyle, behavioral, and sometimes benefit type segmentation, and each of those have subcomponents. So there's lots and lots of choices. And what we do is we put people into similar groups. So they have things in common from a marketing perspective. We then come across and select one of those or more to be our target market. Our ultimate goal is to make the business more successful and make more money, be a stronger competitive position. And we do that by developing a marketing mix, positioning and strategy that is aligned to the needs of that target market. Okay, in most textbooks you'll see that three big categories of evaluating market segments, and this happens after we've assessed them for the effective criteria, which is also stated. But let's assume that we've done a good job of our segments and we've got anywhere from 4 to 10 segments to have a look at. Which ones become our target market? Three things we look at. I'm going to drill down on each of these so they make a little bit more sense. Okay, the first point is all about the size and the dollar value and the potential of the segment. It's very much a financial perspective, and it's a little bit analytical from that perspective. So we come in and look at it. Okay, how much money is sitting here? Is it a viable segment? So that's a combination of things we would look at. How many consumers are there? Okay, because eventually we're going to have a market share and we want a bigger market, and if we can get a share of that market, that'd be fantastic. What is the profit margin per product? Is this a segment that is willing to pay a little bit more? Are there nice fat profit margins in there? That'll be helpful. And then we can work out from those sort of things, how big in terms of revenue sales it would be, in terms of potential sales from that segment, and how profitable that segment would be. And then we also look not just today but also in the future and go, okay, how big is this segment? Is it a growing segment? Is it a declining segment? We would have forecast using our environmental scans, working out that this is going to be a real growth segment or not. And obviously a growth rate means that there is potential for us. So it's not a great segment today. It's relatively small, but in the future it's going to be 30% of the market. And if we can get in there early and build that customer loyalty and our brand awareness, we will be so well placed. So not a great segment today. In 5 years' time, it's going to be fantastic. So we can then work out our future profitability. But very financial, very analytical, this part of it. Then we've always got to build marketing strategy, and obviously where we're going to compete. Target markets are central to our marketing strategy development. So what we need to do is look internally. Okay, so we need to go, okay, what are we all about? What's our mission? How's our strategy playing out? And how does these segments that we're considering fit with that? Okay, most companies, the second point there, will want to grow. Does this give us growth opportunities? How fast? If we want to grow the company by 10%, 20%, 50%, which segments do we need to be chasing as target markets to make that happen? Will this segment be easy for us? We've got an established brand, an established positioning, an image. Can we carry that brand into that segment? It's a different bunch of consumers. They're not normally dealing with us. Can we win their business? I've got here good from an opportunity cost view. And what I mean, if we expand into a new target market, we invest in that, that means the company has to put money behind it. So there's less money for other things to be invested in. So is this the best use of our money to go after this target market, or are there other things we should be doing with the existing target markets? Obviously, coming up with a new target market, we need a new positioning, a new marketing strategy, and marketing mix that's dedicated to that target market. So entering and chasing a new target market takes time and money and financial resources. Are we in a position to be successful? Because there's no point usually going in tinkering and failing, and that may damage our brand in other markets. But if we're going to go and pursue another target market and redesign our marketing mix, we want to be successful. And a key part of that is, do we have the capabilities? Do we need new products? Do we need new retailers? Do we need to reposition our brand? Do we have the ability or the capability to do that? So this point is very much internal looking. Okay, so we've looked financially before, and now we're looking internally. And the final point is what's called structural attractiveness. So the structure of the segment or the market, how attractive is that going to be? And there's a couple of things we need to look at. First thing is how much competitive rivalry is there. So we're going to be a new player in that segment. Will competitors attack us? Will they discount their prices? Will they increase their promotion? Or are we going to be largely ignored? Okay, so high rivalry is not good. Low rivalry is quite good. How strong are the existing players? Are there companies that dominate that market, that sort of own that segment? Obviously, we want not a concentrated market. We want lots of individual players who don't have much market dominance. A couple of large dominant players is not going to be overly great. Switching loyalty, the wise run over, but are customers going to switch? If we enter that market and we offer products and prices, etc., are we going to win some business? Or is it an extremely loyal segment that is not going to shop around? So we want somewhere in the middle. We want them not too loyal because we're not going to win their business. And we don't want them too much switching because we'll win their business and lose it. We want it somewhere in the middle. How price sensitive are they? We don't really want to be in segments where it's very much a price game. So again, you want some price sensitivity, so we can do sales, promotions, etc. But if it's too high, if they're just chasing price, it becomes a price game and our profit margin reduces. If there is no price sensitivity, specials and deals and sales promotion makes it hard to win in any sort of business. So we need somewhere in the middle. Sometimes there may be a legal requirement. We may need to get a license, but it might need to be regulated or something like that. That's more maybe in a financial marketplace or something like that. Food, there's bits and pieces around food safety. What things do we need to do differently? Okay, so that's something we have to work through. A little bit from Porter's 5 Forces there. What is the bargaining power of suppliers and retailers? Again, this assumes we're a manufacturer stuck in the middle, but if we've got dominant suppliers and then dominant retailers, we're the ones that are squeezed. So we want something that's suitable there, somewhere moderate. And if we have a physical product again, and we need to sell it through retailers, are they easy to get? Or are they locked into long-term relationships with existing players? So we've got all that pieces of information. How do we then use that? And the easiest way is to use some sort of scoring model or an analytical approach. Now, there's a whole bunch of assessment factors that I just went through. I've just put some of them here. Each company would design this themselves based on what they think is important to them. And I've got some scale of importance which I've made up. Obviously, the company would make that up themselves. And you simply go through for each segment that you're thinking about. You go, what's the potential revenue? That's fairly important for us. And you give it a score or a rating. A score is a number, and a rating, it can be just a word such as good or great. And then we just go through and we summarize, and we can multiply these out and add them all up if we wanted to, or do some general assessment. But to do it effectively, we need to list the assessment factors we're most interested in, making sure we go from financial, the size and the growth potential, to our goals, our strategy, and then finally to structural analysis. And then finally to structural attractiveness. So we've got to have factors from each in there, and they've got to be fairly balanced, and then we use some sort of scoring system to work out, gee, this is the best target market, and that's the one we should pursue. So hopefully that's helpful, and please subscribe